Fortunately, the basics of life insurance are actually pretty simple. The first is life insurance is a financial product that protects your family in case that you pass away. There are two main types of life insurance. You're going to have permanent life insurance or term insurance. Most people actually only need term insurance as the risks that they want covered are only lasting for a set amount of time. Those risks include having your kids covered while they're still dependent on you, covering your mortgage while you still have a large balance on it, or protecting you up until the retirement age. For those three scenarios, term insurance is your best fit. When it comes to trying to assess what your coverage amounts are or what the death benefit would be, you have two really good resources available to you. You can either go online and look at an online life insurance calculator, or you can contact a broker who will then look at your entire financial situation and help you assess what shortfalls you have in your financial plan. Both will be able to give you a starting point as to what your actual needs are, and then from there, you'll be able to start looking at quotes and assessing which policy is best for you. When it comes to the actual pricing of life insurance products, they're relatively similar across the board, although some places are more expensive compared to others. At the end of the day, you need to assess what product features are being offered and what your individual needs are, along with your budget. And then from there, you'll be able to determine which policy is best for you. There's two types of permanent life insurance policies. You have whole life, which is more simple and has guaranteed cash values. And then there's universal life, which is a more complex permanent policy. With a universal life plan, it's better suited to more investment savvy individuals who have very high disposable income and have already maximized the tax-free savings accounts. These permanent policies are very expensive because the death benefit is guaranteed. That's why it's suited for needs that will never go away, like estate planning, or if you've already maximized your tax-free investment accounts, or if you're specifically planning for final expenses. The second important part about life insurance is your family will receive a tax-free death benefit. With term insurance, your beneficiaries can claim if you've passed away during the policy's term. With permanent insurance, your beneficiaries can claim at any point in time because the coverage lasts forever. What a beneficiary is someone that you designate in your policy to receive the funds. They'll receive the funds equal to the coverage amount that you chose, completely tax-free. You can set up the distribution for your beneficiaries as you'd like, and know that these people will get the funds without any interference from the government or additional taxation. So your family can use the death benefit for whatever they need. This includes any daily expenses, paying off debts like a mortgage or car loan, taking time off of work, saving for the kids' education, putting funds aside for retirement, and many more. Essentially, they have this lump sum of money available that they can use for whatever they choose and what's ever important for them, and allows them to continue life even though a severely tragic event occurred. If you were to pass away and needed to make a claim on a life insurance policy, essentially your beneficiaries or close loved ones would submit the claim to the life insurance company. From there, they would just verify the death, look at some death certificates, fill out some additional forms. Okay, who are the beneficiaries on this policy? Once they've nailed that down, they would then distribute the death benefit. It's a tax-free lump sum, and it gets distributed based on what you've set up in the contract. And then from there, the payouts go out, and then your loved ones can essentially use the money as they see fit. If you don't die while having a term life insurance policy, then you're gonna go through the entire duration of your term alive, which is a great win. That's what you got the policy for. If you don't pass away, then nothing happens. It's like a home and auto insurance policy. If you don't make a claim, nothing happens. At the end of the term, the policy does expire. At that point in time, you would need to decide, okay, what's my risk profile? Do I still need life insurance or not? And that's a great time to have another conversation with a life insurance advisor. So some reasons why a life insurance policy won't pay out. The biggest one is just fraud. So if you make blatant misstatements on your life insurance policy, where you just don't answer questions truthfully and you withhold certain information, then a life insurance policy isn't going to pay out. If one of your beneficiaries dies, you're not going to get a payout because they weren't one of the insured. But for the most part, that's really the only reasons why life insurance policies don't pay out. It's due to fraud. With most fully underwritten life insurance policies in Canada, the coverage starts immediately. There's no waiting period. The only exception to this is there's things like the incontestability period, where in the first 2 years, the life insurance company has the right to reopen the application just to verify that information was answered correctly. So that's within the first 2 years of you passing away. The other thing to be cognizant of is the suicide clause. It's standard across every life insurance policy in Canada. In the first 2 years, if you were to pass away by suicide, the policy doesn't pay out.